Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the kind of reaction rally, the bounce that we're getting on the chart, as we did have a significant plummet the other day, right? Just yesterday. So as you can see, most coins are still fairly in the negative territory, but we are getting some kind of degenerate bounces from a lot of these coins as they try to front run a possible reversal. And of course, to give some context to the possibility of a reversal to the upside, let's just go ahead and see what's happening on stocks. And you can see that stocks did end up bouncing in that support zone that I did suggest on the S&P, on the Nasdaq, on the various indices where I did have my green box marked out. And of course, bouncing on support is not unusual, but what it should not be confused with is a turnaround in the chart, and we'll explore that in a bit. I'm going to try to keep this episode a little bit punchier than other episodes. I've made a few long ones in the last week or so, so I do believe, a short one is in order. But you can see that it is a nice day for stocks today. And of course, this does come with some confusing data because part of the dump that we experienced wasn't just, the Bitcoin that was put on exchanges and then was sold, these type of, old whale accounts. And it wasn't just that we did have a manufacturing report that did put us far more economically overheated than what the Fed would like, suggesting that the Fed could raise interest rates, but that we also got, kind of a forewarning from Mester and Brainerd over at the Federal Reserve, who were speaking today, but we actually knew the contents of what they'd be saying yesterday, which is that they believe that the Federal Reserve is going to have to continue to increase interest rates, and that suggests more downward action, more downward pressure on the stock market, on Bitcoin, on crypto, on all of these assets that are traded along with the stock market. And so we basically have bearish news, but that doesn't stop the chart from being traded. And what you can see here, if I just move past my markings, is that we did have several several bullish drives of divergence being built up on the MACD in particular. If we take a look at the RSI, you can see that we did have a couple drives of bullish divergence building up on the RSI on the 4 hour, and then let's take a look at the daily. And you can see that there was the possibility here for some bullish reaction as we take a look at how these divergences are kind of adding up in the bearish control zone. And what I'm really looking at is this MACD divergence here, which basically has given us this little pump and has been kind of continuing to build up on the charts, including from this point back here in July, just adding a little extra power to this bump. But what we probably want to pay attention to is really how high does this pump get us? Because while we are essentially in our momentum control zone here for the day, if we do close above this region, Bitcoin is going to have a fair chance to try to bust through this diagonal kind of trend to the downside that it is experiencing right now. But as you can see, we are getting a rejection off of that zone. zone. And what it looks like, if I go back to the 4 hour, it looks like more of a breakdown that's doing a retest, and then a likely or possible rejection is what we should expect. Now, there's no real bullish news that could propel Bitcoin to the upside, not that I'm aware of. And so, really, we are just at the mercy of kind of a fundamental market forces. And for me, that would suggest a continuation to the downside. Now, yesterday I was talking about that 4 hour volatility that was basically driving us to the downside, and we were only halfway through the move. If we just take a look at the chart here, you can see that we were effectively right here. We were approximately at 19,100 when I made my last video, and I was telling you guys we were only halfway through the volatility move, and so that this thrust down should have another 50% to go. And as you can see, we dropped this far, and then we dropped another leg down. So we did get that 2 legs down. And if we switch to the hourly, you can see what this looks like. Basically, we had this drop, kind of a wick back up as we attempted to find support. And then I was warning you guys the volatility was likely to continue another leg down, and it did chop that out. Now, what happened overnight, of course, after my video, after this second leg down, is that we did end up finding some support. And not only did we find some support, but on these lower time frames, on the 1 hour and the 4 hour, we did put in a bit of a higher low, giving us a little bit of a bounce there, and then that suggested a bit of strength, which then propelled us to move forward and retest this breakdown. And I can show you where that strength is coming from on the Bitcoin chart, but we have to turn over to the CME, because if you turn over to the CME, you can see what's happening here. Look at this. 1, 2, 3, a nice kind of triple bottom here. Yes, we are a few dollars off here. Yes, we did break the line over here, but overall we are getting that kind of bounciness. And if you look at the 4 hour, where significant candles are closing, relatively the same area. This is just a tiny wick by the 4 hour, and then going to the daily, you can see that this daily candle is effectively break even with this one. And so that did suggest some pretty reasonable support that have given us significant bounces in the past. And so, of course, traders are using this, and then they're trying to hold above the daily, the bulls are trying to get above this daily momentum zone here, the daily Stokes. They weren't able to capture the MACD, but they are able to hang on to the Stokes and kind of change that volatility direction to the upside. And so, as the volatility, switching back to the 24/7 exchanges, as that volatility on the 4 hour did come to a close, what we can see is that here we go. This is where we were yesterday when I was reporting. We were somewhere in this area. I mentioned there was another half of this leg to fall down. We continued to fall down, and then I said it wouldn't stop until our volatility pinched off, and there we go. The volatility pinched off, and that allowed us to potentially have a change in our direction based upon new kind of volatility on the 4 hour. Now, these 4 hour moves aren't the most significant. They easily get replaced by 8 hour and daily moves. And so if we take a look at the 8 hour, you can see that the 8 hour, while it has flattened out, it really hasn't pinched shut. And so that does still imply a high risk of continuing to the downside. But one thing that you will notice is that the 8 hour is turning flat underneath the mid level of our volatility indicators. And often, when we turn around before crossing the midline, you get a bit of a rejection. And so this could end up being just a volatility support zone for Bitcoin, perhaps because of that double bottom, triple bottom on the CME chart, perhaps just because of other macro factors that we're not really analyzing at the moment to save time. But basically, we will have to see whether that 8 hour continues to thrust upward, breaks through this midline, and then continues to expand to the downside. If we lose that daily Stokes, that momentum to the downside, then perhaps this will continue to the downside. But right now, Bitcoin is putting in a good fight. If we look at the daily, you can see that overall we were expanding to the downside. We were contracting to the downside, and that we are starting to reach maximal lows. And so even the daily does suggest that this move should start to round out, or that it should continue just a bit. And so the 8 hour and the daily are in agreement that either we're going to consolidate, or we have the potential to just expand a little bit more to the downside. So we're gonna have to just keep watching that. Let's just take a look at the 2 day. The 2 day signal actually did close off. This could easily continue to go, but just kind of a little fake out, sort of like this type of little thing. But this looks pretty clean to me, and so I would expect that perhaps on the 2 day we do have a turnaround, but we're going to just have to keep watching that 2 day signal. And if we go over to the CME chart, I just want to double check. Yeah, because the CME move isn't finished. Okay, so if the CME chart, the professional exchanges are still expanding to the downside, well, we've broken the mid range, and so I would expect, perhaps a little bit more thrust to the downside based upon the 2 day signal. But that's a lot of time to play out. It doesn't have to play out today. Today or tomorrow could be, its own thing compared to the 2 day signal, which could take multiple days to end up playing out. And you do see the daily signal, contracting to the downside still on the CME professional. On the 24/7 exchanges, it was pretty much a closing, but the professional exchanges says it might have a significant amount of continuation to go. So we'll keep our eye on that. Let's see here on the 8 hour. 8 hours, same kind of picture, just kind of a mixed message there. And then the 4 hour did close off on the professional exchanges as well. So whatever that move was on the 4 hour that really pushed us down, it was concluded on both the professional exchanges and the 24/7 exchanges. But we still have some debate about those longer range volatilities. And so the degree to which Bitcoin can capture its momentum zones on the daily, and perhaps even on those higher time frames like the 2 day, are going to be very significant for how this ends up playing out. And so we are all just watching to see whether or not it can push through this kind of downtrend and perhaps even recapture this diagonal as some type of massive fake out to the downside, but before perhaps pushing up into this weekly, potentially bullish area. By the way, these weeklies that I have marked off on every chart, this is just for the possibility to be macro bullish. It's not a confirmation of macro bullish. Being within being within the weekly 4 and the weekly 9 just gives you hope that on the macro there is just a hint of a possibility of being bullish. As long as you're underneath these solid blue lines that I have over here, on the macro you are just incredibly weak. Okay, so you can see on the macro Bitcoin is incredibly weak. It's really just struggling to survive on the daily, and so we're all going to be rooting for it, either to get over this diagonal right here and perhaps perhaps bounce into that macro possibility zone, or for it to get rejected if you're a bear and perhaps you want to see this thing go down further. Of course, we do have our bear flags still in play, and so I am still, under the impression that we could go very significantly low based upon these bear flags. And I dare not even tell you, what some of them could predict, because if you really want to go by a strict bear flag here, we basically could go to zero, right? So Bitcoin will have to have some type of rounding. There will have to be some type of bottom structure being put in eventually before this type of a flag plays out on the linear chart. On the log chart, of course, it does just suggest a similar area as where I'm projecting for a possible, catch in the market, which is along this historical support line. And of course, on the alpha origin channels that I've marked out, you guys know my opinion on this. I'm of the opinion that we're going to see something like the $7,000 to $10,000 range, and I will change my opinion only based upon how the price over earnings factors get evaluated in the coming quarters, the coming next 2 quarters with the stock market. Because while we have priced in much of the Federal Reserve's interest rate hikes, and maybe there's another leg down, maybe another leg or two down, based upon interest rate hikes. Perhaps the Eurozone increases 75 basis points. Canada increased 75 basis points yesterday. And so, of course, all of these, interest rate hikes are making liquidity very scarce. It increases the chance of a deeper recession. And so all of that is very bad for the market. But what's worse and what can drive us just to straight to hell is if in quarter one 2023, if in quarter two 2023, the stock market decides to reprice all of the stocks across the board because they see a global recession, because they see a deep entrenched recession as opposed to a transitory recession, as opposed to a quote unquote soft landing that the Fed tried to convince us of. And if the market sees that there is no possibility of a soft landing, if the market sees that it's more likely that we have a deep recession or even a global financial crisis, then all those stocks will be repriced to the downside. And since Bitcoin trades with the stock market, I do believe that it won't be until the first quarter of 2023 that we could even imagine confirming. It doesn't mean we won't have reached it, but it means that we can't confirm until earliest Q1 2023 and most likely Q2 2023, and then it will be a year after the Fed finally pivots on whatever change in policy it's going to make. It will be at least a year after that until the recession is over, until the bear market is over. And while the maximum low price probably is found on the charts somewhere between Q1 to Q2 2023, the bear market probably won't end until at a minimum the end of 2023, and probably somewhere in early 2024 if I'm just using macroeconomics to really try to parse through this stuff, to try to understand where we could be going. And this is how I see it. Now, some of you may argue that a 50% drop in Bitcoin, a 60% drop in Bitcoin is not possible, but I will just remind you that in the last bear market, we had a very similar thing. I have been talking about this for weeks. I have been talking about this for months. We are getting into that area where people think, oh, okay, the Federal Reserve is doing its job. The Federal Reserve is going to stop being so heavy handed. But then you get into a zone zone where something else comes up, right? And earlier this year we thought it could be war or whatnot, but what we're really finding out is that that next factor could be the recession, and a recession could actually initiate a downturn, a macro super cycle downturn on the stock market, which would then drop stocks 20 to 30%, maybe even 30 to 40%, which I dare not utter, to be honest. And for Bitcoin, that could be any kind of a drop between 30 to 80%, meaning that 50 to 60% drop is really quite reasonable. And so if we do see a 60% drop, that does bring it right to my level, which does line up with these type of supports. And we could even get a wick lower, sort of like the scary COVID stuff, just depending how bad the situation is. But if we do get a soft landing, then I will be wrong, and most likely only what the Fed is doing will be priced in. And then maybe, who knows, maybe it ends up being 14,000 is the bottom, or maybe we have even bottomed and maybe the Fed gives us good news in September. I doubt it. You guys know my theory of the market. Everyone needs their own theory of the market. This is mine. And guys, I'm sharing it with you just as a friend, not as financial advice. I do hope you guys protect your capital, okay? Protect your capital. And I will give you a bullish case later on in this episode. So stick around because I'm going to tell you how we can avoid a bear market, a deeper bear market, and how markets could turn around. And the exact point on the stock markets, hint, it's coming up soon, which you can confirm whether or not we are going up or going down, including on Bitcoin by using the stock market. But first, let's check out Ethereum because Ethereum is doing amazing things. You can see Ethereum just quickly bounced back. And yesterday I was talking about how Bitcoin is still the master of the charts, but what you can see is that Ethereum is still trying to be its own man, and once again it went full Vitalik on us and just is completely erect in an upward direction here, taking out its daily momentum zone bullishly, as well as basically reclaiming its weekly bullish potential, meaning that Ethereum is ready to go. If this market does turn around, if we did bottom out in the market, Ethereum is ready to go. So guys, this may not end up holding. Maybe it does end up being a rejection, some type of a fake out. But as you can see, the measured move for Ethereum's descending wedge here, of course, is still that $2,000 area. And you can see that Ethereum bulls are really, really trying to make that happen as they stay excited, just as excited as Vitalik about the merge. Looking at the Ethereum futures chart, the CME professional exchanges, you can see the exact same thing is happening. And while we are getting a little bit of resistance in this zone, you can see this wick, you can see this wick. We are getting basically wicked in the same area. We have yet to prove that we are being rejected here. We're just getting a little bit of a pullback. And so we will want to see if we can hold on the professional exchanges that type of weekly just possibility, that glint of a possible opening for future macro bullishness, or if we're just going to hold this daily momentum level and perhaps put in a lower high here and then perhaps chop our way down, maybe eventually filling in this CME gap, which is still low hanging fruit and could be something that gets filled if we do retest market bottoms, perhaps next year in the early quarters, or perhaps in September if the Federal Reserve and the European Union just have really bad news for us in terms of their interest rate hikes, right? Guys, let's go ahead and jump over to some of our favorite coins because they are taking the lead from Ethereum and they are trying to bullishly recapture their zones. Oh my gosh, CRV, what are you doing? CRV, my goodness. I wish that I had re-entered this one. I was strongly thinking about it as we broke back into this wedge just to capture that 5% move potentially to the upside. But in fact, it has broken clean through the wedge and gone 10% basically up from the bottom here. And so that was a pretty astounding move by CRV if you were able to call that. This is just a roller coaster and fully outside of our range on two sides, on three sides actually, if you just consider that, this is kind of another breakout. And so what we have done is something, it's like a double fake out, to the upside. So let's see how this goes. This thing could perhaps break back into its wedge. Of course, you can always continue to extend these things. And so if we just extend the wedge like this, then it suddenly looks like less of a big deal. And that's the problem with a lot of these patterns. And it's one reason why I don't consider myself a patterns trader. I would have rather have traded the trend, rather traded the momentum, rather have traded the volatility than just some kind of a pattern, right? However, in terms of planning your entrances and your exits, pattern, you just can't beat having a good pattern because look, you can say, okay, we're pretty much at support, we're pretty much at resistance, pretty much at support, pretty much at resistance, and you can just trade the kind of range if you do see these type of patterns being put in. And similarly, if you had just adjusted your triangle, you guys don't have to depend on me for this. You guys can use your own brains and figure out what's going on there. If you see us either, breaking back into a formation, you can consider it might move to the other side of its formation if historically it's just been moving up and down that formation. So patterns, they are manipulable. They're able to be manipulated by the real price action, and they can change into totally different patterns. For example, if this thing continues to go up and then gets rejected, what we might end up seeing is that it turns into more of an accumulation wedge, right? Or if it comes back down, right, and then let's just say it's something like this, and that just ends up being a wick, and then it comes back down like here, then we might say that it's some type of a distribution wedge, right? If it starts getting forced into a corner down like this. And so, guys, I highly recommend you don't trade just from patterns, but that you use your brain. You look at the real price action, you look at the trend, you look at the momentum, you look at the volatility. You can even throw on your EMAs to see if anything is turning around. And what we did see here, of course, is that we did get a 4 and a 9 squeeze, which then led into a 9 and a 10 squeeze, or a 21 squeeze, pardon me. And then what we did get based upon that 4-hour squeeze is a pop to the upside, which was why I was showing you EMAs the other day. They are just brilliant for trading, and while they may not capture the consolidation at the top or the bottom, they capture the squeezes, and then you can capture those moves. And so, guys, if you used your EMAs the way that I was showing you, then you could have grabbed a 10% move. Of course, I wasn't paying attention to this stuff, just kind of taking a break. To be honest, I've been getting a little bit stressed from the charts lately, and you guys know that I was very significantly sick for actually a couple months, and so I am just recovering right now. But you probably don't notice from all the energy in my voice. Anyway, going ahead and moving to, well, first of all, let's just say that CRV, it looks pretty bullish. It's doing what it needs to do. We do want to see it break above $1.20 and just kind of do something new, and then perhaps retest this type of a pattern, or at least retest that little support level that it kind of has here, right? if in order to continue to the upside. Otherwise, I would say the majority of that move is already out, and then this is very high resistance for CRV right here. So I don't think anyone should be entering right here. You're going to just probably be wanting to take profit or just wait and see if we can basically turn resistance into support. ADA, similar story, trying to bullishly recapture what it lost, getting a little bit of a hiccup underneath this 4-hour 200 EMA here, but you do see that the squeeze is on for ADA, and if Ethereum and Bitcoin can continue up, this might have a nice little pop to the upside, perhaps to 50 cents again. And then we might suggest that it starts getting limited in this area just because of these overall kind of trends that it has on here. And if it was able to break above that, which I kind of doubt that it has the energy on its own to do, more, I would expect ADA to just kind of test this thing and then perhaps meander and just wait for the rest of the market to give it its cues. ADA has never really been a leader in the market, so just I would say it's the middle of nowhere right now. There does look to be a bit of a potential for some upside on ADA, so I'm not going to count it out, but probably not a play that I would be taking. That CRV setup was much more interesting to me. KDA trying to recover the diagonal that it lost, very similar to Bitcoin in spirit here, okay? So you can see this diagonal, if we, oops, that's probably locked. Yep, there we go. If we just expand this kind of a diagonal floor that it's basically put in here, and look at this breakdown. It's just coming back up, basically retesting the bottom of this distribution wedge that distributed it to the downside. Let me turn off my EMAs because they aren't really that important for KDA right now. More so, what's important is that KDA is just totally failing to reclaim its daily momentum zones. It's nowhere near its weekly, potential bullish zone, and so I can only say that KDA looks bearish. And while I do get a lot of fans from Kadena making comments or DMing me or asking for updates on Kadena, I just have to be honest with you guys. Like, this isn't the best look, right? It's not the best look. We want to reclaim this level. We want to get ahead of that wedge, just like CRV is doing, and then we can recapture some of this momentum potentially to the upside. But until then, we are just in no man's land, and to be honest, we're kind of in the middle of the range and at resistance, on that level below us. So, it's not the best place to long. You could potentially have longed at the bottom. You see this kind of teal zone that I have. It didn't really touch the very bottom the way that it did here, the way that it did here, the way that it did here. Sometimes it front runs it like here and here, where it made this diagonal pattern start appearing, and it just did it again. So there wasn't really a good play for me on this on Kadena, and I am just waiting for a better opportunity. Um, it does look like that we do have the possibility to turn to the upside a bit more, but again, I think Kadena just trades along with Bitcoin too much. Guys, I'm sorry this episode is turning long again. Let's go ahead and just look at Zilica. Same thing, basically same as Kadena, okay? This is one of those coins that trades very similarly to Bitcoin, just like Kadena, and so it broke down. It did catch support. Don't know if you can see this dotted line that I have here, but you can see that one right there, and it did actually catch it almost perfectly, and so that would be just a normal place for it to kind of catch, considering this low right here, and it's just meeting resistance at this line right there. So guys, again, it's trying to recapture its daily momentum. It is above the Stokes, and it's within striking range of the MACD. So Zilica looking okay for an attempt. Maybe it's going to be able to push its way back up. Um, Yeah, there could be. I mean, maybe it's going to have a pullback or something, but there's still potential for it to continue to go. Again, it's just one of those coins that's going to be just very, very dependent on Bitcoin, okay, at this point. Let's take a look at Flux because Flux just lives in its own universe. And as you can see, Flux did basically exactly what you would want it to do. You see this green box that I have here? Boom! Flux did a double bottom off of it just beautifully on the breakout of that inverted head and shoulders that we had marked out, just double bottoming on the breakout, confirmation. And so what did we get? A nice 20% almost spike in Flux, just proving itself to be one of the stronger ones. And then what did it do? Then it basically took this resistance zone that I had marked here for the measured move of the broadening descending wedge formation that we had been playing, where we took our profit here. And look what it did, guys. Look what it did. It took that zone and it flipped it into support. And so that is a very bullish action by Flux as it builds its structure, as it builds support for itself off of this point, and then launching here, just kind of building up strength as it goes along. Even if it got slapped down, it did not get slapped down significantly by any regard. It didn't even lose its daily momentum zone. While everything else was plunging to hell, Flux held on to its daily momentum zone and it's still above its weekly momentum zone. So, guys, like the potential for macro bullishness of Flux is being confirmed. I've been reporting on this for weeks. I've noticed some people are just FOMOing into a Flux, and a lot of those YouTubers are just trying to FOMO into Flux. But we've been talking about it for multiple days as this pattern has been playing out here. And I should say that we captured this move, and so the Alpha Fam should be very proud of these plays that we've gotten here. I hope you guys were able to capture that double bottom. But if you weren't, don't worry. Neither was I. This was a very confusing, set of moves here. But guys, keep in mind, these type of supports and these type of momentum zones, they are significant, and you can see in real time how they work. You see Kadena, what happened to Kadena and Zilica when they lost them, and you can see here what happens when Flux, basically acquires and keeps them. Let's jump over to the VIX. You can see that volatility just plummeted to the edge of this formation. I don't really know what's going on with this. It's just this is a very weird retest of a break back into this pattern, and so it did give us a very easy trading day. You can see that the dollar also just dropped, and it actually retested that zone where there was that CME gap, just giving us a very easy trading day. And USDT failed to hold this level that I had suggested that it might flip into support, that resistance that it might have flipped into support. It failed to hold that and just broke down. So again, just a very easy trading day as the VIX, the DXY, the US dollar, and USDT dominance, tether dominance, just to break down, giving a lot of relief in the market. And you can see that we do have these drives, these bearish drives of divergence based upon the MACD here, which have been perhaps informing some of the traders out there. If we go over to the NASDAQ futures, basically, we can see that we bounced very nicely from my support zone that I've had marked out for a while here. You can see that we are attempting, just like Bitcoin, to try to get above this kind of diagonal that we've been putting in on the NASDAQ, just to sit above it and see if we can recapture that momentum zone. We do have the Stoke for the NASDAQ daily, but we do not have the MACD, and we're not even close to that zone for a weekly potential. And so, for a macro turnaround on stocks, I am not convinced. This thing is just chopping around here at support, and it could lose that support very easily with any bad news just in between our momentum zone. Not even convincingly holding on to it. Guys, let's go ahead and look at the S&P. And the S&P is where I want to give you kind of a concept of the possibility of a reversal and what a reversal to the upside would look like. Because here's you can see that we're bouncing off our support area on the S&P, just like what I suggested. That's a support area. What did you think was going to happen? Of course, it's going to get a bounce off of that area. Of course, Bitcoin was falling, but the S&P and Nasdaq basically caught Bitcoin because they're at support. And so if Bitcoin's falling and stock market's at support, then Bitcoin can't just fall to hell all in one go until stocks continue to fall, should they continue to fall. And if stocks continue to fall, I would argue it's going to look something like this. Tries to capture these macro bullish zones, tries to capture these daily momentum zones, fails. Maybe the Fed has bad news, maybe something happens in the economy, and then it just takes us down. We lose this level over here. Perhaps we try for it, try to retest it, and then we just break down past our lows or retest our June lows, right? And that's the real danger. So the level that I want to give you for the S&P, if you guys want a pivot point in the market, okay? If you guys want to say the bullish case is over, then you're going to be looking at probably around 38.25 on S&P 500 mini futures ES1, okay? So you're going to be looking for 38.25. That's going to be the price. Maybe we can say 3790. So basically 3800, okay? This red box. If we lose this red box, sorry guys, it's game over, and our really macro bearish projections are probably going to come true. You can see this downtrend here, and so this could be a very, very scary fall. But let me give you guys some hopium. If you want hope that this thing could turn around, then what you would want to see is I took a fractal off of a turnaround in the chart earlier, like back in 2010 or whatnot, and you can see that this is the fractal that's being put in is the same psychology that we're seeing right now. This was the top of the market. There was some type of upthrust and breakdown, and then of course what happened is we basically caught support at the same relative position that we're in right now. And then what we were able to do was push up. We weren't able to break through the downtrend on our first attempt, not really, right? These wicks don't count. And then what happens is we got rejected, but our macro, you see how interesting these things that I'm marking out are? Look at how they play with this fractal so perfectly, so you can understand these zones that I'm marking out. It's not BS, guys. These momentum zones are real, okay? They do have real importance. And so please appreciate the work that I'm doing every day to show you these things, because they are significant to hold in your mind. And even if I can't give you an update every 4 hours as the market dramatically dramatically changes every 4 hours, up, down, right? Bearish, bullish, right? I can't give you an update every 4 hours, but what you can do is keep in your mind's eye these momentum zones and whether or not we're hanging on to them or not. And then if we do, and then you can see in this fractal in 2010ish, right? We had a pullback. It basically reflected off of that potential bullish macro zone, and then it broke its downtrend and just continued to going up ever since. And I'll show you on the chart where I'm pulling that from. Just let's go ahead. Maybe I should switch to the daily or something just to, there we go. So you can see that it wasn't one of these kind of like catastrophic dumps, right? But let's just say that we're having a downturn in the market, and this was very significant. We're having a downturn in the market, and then you can see the fractal that I took was from here, okay? The fractal that I took was basically from here, and you could see how we ended up turning around in the market. And so this would be the most kind of bullish case. This would be what you would want to see if we had just a bull market to come up and if we have bottomed on the market. So jumping forward to where we are, you can see that we're actually putting in a really reasonable fractal of that type of bottoming process in just a standard pullback. And so if this was the bottom of the market, then what we should expect is that by, let's just say, end of September, we basically pump instead of dump. Maybe we get a little bit of bad news, but not terrible news. And then the market says, you know what, we can deal with that news. And then it just keeps on going. And that's going to be your bullish case. So guys, what are we doing right now? So what about this area? What about this area right here? Well, what I can tell you is that nobody knows. Until we get rejected from this macro potential zone that I have marked up here and get slammed down under 3,800, or until we get pop above that macro potential zone, and then use it as support and confirm it as support and continue to the upside, then nobody knows. And so really what we're looking for is to hold above 4,000, right? We're looking to hold above, let's say 4,100, okay? Let's say 4,100. We're looking to hold above 4,100 on the S&P mini futures right here. This is the key, guys. I'm giving you the master key to bullishness. You will know that we are winning if we are able to hold on to 4,100 on the S&P mini futures ES1 by October. That should be a strong clue to you and a nice uptrend on the stock market. On the other hand, which doesn't mean we can't come back down later, by the way, but it will be an interesting zone to watch for a bullish breakout. Now, the opposite is also true. I'm also giving you the master key to tell how we're going to plummet to hell, and that's if we break this 3850, pardon me, 3830 to 37, I mean, let's just say 75 zone. If we break basically 3800, let's just call it, convincingly, then most likely the bearish case is going to play out. So which of these is going to win, Alpha Fam? We don't know, and any shill, any YouTuber, any Twitter account, any guru out there telling you that they know which of these two directions we're going to go, they are a dirty liar. But what I can do is I can provide you the master keys to determining whether we're on that path or not. and then you guys can watch the market, or you can continue to watch me. I'll keep you updated. And so, guys, hope you enjoyed this episode. Sorry it was much longer than I expected. I will try to make a short 15-minute. I guess I just had a lot more information in me than I thought, and I just had to get it out, right? So, guys, that was your alpha for the day. Stay safe and happy trading.